RWAs are heating up on Solana, and with over $1.15 billion worth currently in circulation, it's hard to ignore this rapidly growing sector of the on-chain economy. But let's take a step back and talk about what these actually are and dig into exactly why RWAs are growing exponentially. On January 1st, 2024, Solana had $100,000 in total volume of RWAs. By January 1st, 2025, that number had grown to $174 million. And by January 1st, 2026, it reached $875 million and just recently passed over that $1 billion mark. Now, $1 billion sounds like a lot, but to the experts, that's a rounding error. McKinsey predicts this market will hit $2 trillion by 2030. The Boston Consulting Group takes this even further and is calling for $16 trillion. And that's precisely why we need to talk about RWAs right now, all the way from the basics to why these assets are better when tokenized, even to some degen use cases that Solana has opened up for us. Because the idea of tokenizing everything has been a huge topic in the crypto space for a really long time. And while it's been possible for a while now, we really haven't seen the uptake and popularity hit like it has recently. So why is this exploding now? It's not just the tech, it's the global economy. Stick around to the end because we've even found some strategies that are offering up to 20% yield on these assets. So for starters, I'm going to talk about what a real-world asset is, and I'm going to be referring to them as RWAs for the rest of this video just to keep it simple. These are tokens that represent ownership of an asset that exists off-chain, available for anyone to trade. To the user, these look exactly like any other token would, like Sol or Bonk. They sit in your Phantom wallet just the same. But under the hood, it's a claim to a share of the most popular stocks like the SPY, Tesla, or Nvidia. You can buy or sell these tokens anytime on a decentralized exchange, and you can transfer them instantly and for free. Imagine how long that would take in a traditional investment account. The RWAs offered on Solana right now are truly a vast improvement from even a year ago. As the Solana ecosystem is maturing, we will only continue to see the rise in these assets that you can hold for years instead of a few minutes like what we saw with meme coins. While Solana becomes the everything exchange and all assets are going to be tradable, it is incredibly important to have assets that can be held for the long term. This was most evident in December 2025, when the rest of the market was panicking. The number of unique wallets holding RWAs on Solana jumped by 18.4%. That's nearly 20% growth in a single month, and that is over 126,000 real users putting their money into RWAs. On top of that, Bitwise recently said that if the Market Structure Clarity Act passes, the tokenization wave will take off and that Solana will be one of the biggest beneficiaries of that growth. One of my theories is that stablecoins have paved the way for both the regulatory approval and the general understanding of taking an asset that is off-chain, having a legal structure for holding that in a bank or financial institution, and tokenizing it. That's what a stablecoin is. For reference, there is $308 billion in stablecoins in circulation right now. Stablecoins are consistently in the news. The US had the Genius Act passed with regulatory clarity, and in 2025, $100 billion worth of stablecoins were added to the market. So yeah, you could say that 2025 was the year that stablecoins went mainstream. And really, this set the stage for real adoption and growth of RWAs. Now, I would make the distinction also that stablecoins equal cash, while RWAs are more focused on investments. This can be seen in the first wave of RWAs being primarily stocks and metals. And this has gone parabolic on Solana, becoming the #1 chain based on the market cap and the trading volumes of tokenized stocks. I think that this is downstream from Solana's main vision of being a better NASDAQ, combined with its focus on usability that has consistently brought users to the chain and kept them here. Solana is where we see use. The velocity of money has always been the highest among all the blockchains. And this is proving true once again on this newer asset class with protocols like Remora, a tokenized stock issuer on Solana, which just passed $50 million in traded volume. Having a token that proves ownership of an off-chain asset is insanely beneficial, especially if you can trade it for any asset at the speed of light. But I also have a deeper reason for thinking this. Let's be honest, no one comes to crypto to use dollars. People are here to hedge against the dollar. Bitcoin, gold, real estate, they all go up over time. That's not the asset getting more expensive. That is the dollar getting weaker. This is the trade of the decade. Yes, there are still amazing use cases, and people that live with unstable currencies are getting a more stable store of value with the dollar. But in crypto, everyone is betting against the dollar. Anyone that says anything otherwise is either not up to speed or is lying. Bitcoin appreciates against the dollar, Solana increases against the dollar, gold increases against the dollar, and yes, stocks increase against the dollar. This is dollar depreciation. This is what Bitcoiners got right. This is Ray Dalio's trade of 2026 from his most recent report, highlighting currency depreciation as the dominant theme of his investments for this year and the years to come. This is why the US dollar went down over 10% last year. Look at what a dollar was valued at in 1971 versus today. That's when we got off the gold standard and have consistently lost value ever since leaving the Bretton Woods system, which tied the dollar to gold. This was when gold was worth $35 an ounce versus almost $4,500 today. My personal favorite anecdote is that an ounce of gold equals a well-tailored suit, which in 1971 was around $35. And now, you guessed it, it's around $4,500 for a tailored suit. That's a long way of saying that we should be holding assets and not dollars. Guess what? We can do that now. Tokenized gold, tokenized stocks, we've got them all. Not only do we have them, they are better versions than what you can buy in a traditional investment account. You can self-custody these assets. You can send them between accounts to whoever you want. You can borrow from them if you want, and you can even get yield on them for providing liquidity. You can open a Solana wallet today, fund it your favorite way, and trade into a tokenized version of Tesla stock in minutes. You can send that into a cold storage hardware wallet or multi-sig wallet that has better security than your bank. Now, why does this matter? Because anyone can now hold these assets and only use dollars or your local currency when you absolutely need to. Fiat money is inherently going to lose its value over time. Yes, holding stablecoins and getting 10% yield is possible, but this comes with smart contract risk in DeFi lending protocols, and the rate is often variable. Guess what? You could have held SPYR and you would have gained 16.4% in 2025 for just holding. Now, I don't think that we should be holding only stocks on chain, but a balanced portfolio held in your crypto wallet is now obtainable. You don't have to be levered up and extremely risk on in 100% of your portfolio. In fact, it's better if you're not. Stick around for a while. Cycles happen. In fact, the US president and famed Solana meme coin dev is currently using the stock market as his measure of success, and we can all benefit from it. All right, so we've got it. RWAs are great tech and have a really bright future. Now, what can we do with them on chain? Some protocols like FlashTrade are experimenting with highly leveraged trading products like 10x exposure to tokenized stocks like Tesla. These kinds of products show how RWAs are getting plugged into on-chain trading, but with higher risk. Now, the way that FlashTrade works, it's called peer versus pool. So when traders take these risky positions, they're trading against the liquidity pool. In platforms like this, you can also provide liquidity to the pool to play the bank. For doing this, you can generally get a really good yield that fluctuates, but it's around 16% right now. I also have to mention that you can then take this LP token from FlashTrade and you can find more ways to get a higher yield on it in the Loopscale platform. You can also borrow from Loopscale. So if you wanted to do as the elite do and borrow money from your assets and pay no cap gains tax while you do this, you can. One more strategy to throw at you guys is to check out DefiTuna. They have a vault to lend Tesla R and yields are as high as 20%. Imagine getting 20% yield for just holding onto Tesla stock. It's DeFi protocols like Loopscale, DefiTuna, and FlashTrade that are leading the charge for awesome use cases of these RWAs and bringing people in, both native to Solana and from outside our bubble into the entire crypto ecosystem. And yes, that includes traditional finance. These are concepts that aren't just for degens. These are better solutions and ways to interact with investments that we're building. This gets me really excited, and this was a lot longer than I thought it would be. So thanks for sticking around to the end. I think that this is just the beginning of an extremely big market, and I can't wait to see what other RWAs come out and see what else these DeFi devs cook up. Now, I want to leave you guys with one final number. Ethereum currently has $12 billion in RWAs. Solana has just passed over 1 billion. Some people see that gap and think that we are losing. I see that gap as the trade of the year. Solana always catches up to Ethereum. We did it with DEX volume, we did it with active users, and in 2026, we are going to do it with RWAs. Let me know in the comments what RWAs you want to see next. Is it Rivian? Is it all the metals? Is it uranium, Lockheed? I'm hoping to see many more of these, and I'll catch you guys in the next one.